Let's shift focus now to banks. You've got HDFC Bank, which is slated to come out with its numbers tomorrow, and today we're going to kickstart the banking earnings with Federal Bank. Yes, there was Karnataka Bank also, which came out with its numbers earlier this week, however. Let's then welcome on board Kunal Shah to analyze really what lies ahead for banks. Kunal, morning. Good to have you on the show. One has seen an interesting turn of events which has played out since last quarter, wherein for the markets there's been a big sectoral churn and money has been moving out of banks. Banks as a cluster have underperformed ex-HDFC Bank. What explains this big underperformance, Kunal, besides the fact that, of course, the moratorium continues to be a big overhang?
Yeah, hi, morning. So overall, the financial is any which ways the most leveraged space and proxy of economy as well. So the overall downturn which we are seeing in terms of the economic activities and the prolonged disruption which is there, maybe much prolonged compared to what was thought earlier in March. That is leading to some kind of underperformance in the financials index. However, when we look at it in terms of the specific names or the leading banks, they are still doing relatively better.
Yeah, they are. Tomorrow, Kunal, we'll have the big boy HDFC Bank deliver its numbers. There are quite a few contra theories as well in the markets on whether or not it's priced to perfection, what the new management's role is going to be, and whether it's continued to reign as was under the Aditya Puri regime or not. What are you anticipating in terms of not just the operational numbers, but as a commentary as well from HDFC Bank tomorrow?
So this quarter is going to be the quarter of narratives beyond numbers, and this is what we have highlighted in our preview as well. And this will be true even for HDFC Banks, HDFC Bank. So in terms of the narrative, we will have to look into as to how the moratorium has settled towards the end, and what is the flow into the restructuring. Any which ways with this Supreme Court's interim order of restraining banks from tagging any NPLs, I think slippages are more or less going to be non-existential, apart from SMA1 and SMA2 pool, which was outstanding as of 1st of March. But besides that, I think maybe banks that were looking to prudently recognize it upfront, that might not be there now. So I think narrative becomes very critical in terms of what is the kind of stress which would be anticipated as we get into Q3 and post Q3. That is going to be of prime relevance. For HDFC, we are quite positive. They have been quite resilient and confident all through, right since the COVID pandemic has started. They have performed relatively well, and we are expecting similar kind of earnings from them. They have published the business numbers in which they have highlighted advance growth of 16 odd %, which clearly suggests that the market share gain is still on. And with stable margins, we should see more or less more than 15% net interest income growth for them. And then finally, in terms of the earnings trajectory, that would depend upon the credit cost as to those slippages might not be there and the restructuring would be limited. We will have to watch out in terms of what is the provisioning stance which they are taking. Last quarter, they built up some COVID-related buffer, but I think earnings will be more driven by whether they continue with similar buffer and how the provisioning cost pans out in this quarter.
Okay, and within certain stocks as well, let's talk about some of the key earnings that you're watching out for. Which ones you feel will be significant to watch this quarter? Any particular trends you feel may reveal themselves?
No, so in terms of earnings, again, what needs to be watched out is this will be the beginning of the journey in terms of stress recognition as well as margin trajectory. So that will be key to watch out for in terms of industry-wide growth given a low activity level. the average industry growth is still settling at 5 to 6 odd percent. And overall, maybe the commentary from the banks in terms of how they are looking at restructuring, and be it in terms of the extent of the restructuring as well as nature of restructuring, that is something which we will have to watch out for. Overall, I think the sense which most of the banks have been suggesting is a low single-digit restructuring, at least in the interim, and that is broadly the commentary that is going to be from most of the banks. But let's see as to how individual banks comment on their restructuring pool.
Couple of the ones that we're watching out for. First up, HDFC, Federal. Any expectations on these in particular?
Yeah, so HDFC I have already highlighted, and maybe other names I'm not sure if I would be able to comment over here. But HDFC, I think more or less we have discussed it, and so some of these names will be key to watch out for, be it Axis, SBI, Federal is coming out today, so let us see as to how those earnings pan out for them. But the good thing about Federal is, at least in terms of their deposit franchise, in fact, they have the lowest savings deposit rates in the industry at this point in time. And in fact, their term deposits are also very near to the leading banks. So liability is doing pretty well. Asset quality, hopefully they should not disappoint much. And this will really help them as well in terms of the overall better earnings trajectory.
All right, thanks so much for joining us, Kunal. And let's bring you that ground report from Amazon's headquarters then and take a look at how things are being